Folks, how are we doing today? Okay, so today we are walking through an 100K portfolio that can generate over 20K in annual income, guys. I'm super excited to walk you guys through this portfolio I've constructed. Let's just jump right into it. All right, guys. So we are here as per usual in the Patreon community, guys, and we are up to 113 members. Guys, I cannot thank you enough. I know I say this a lot, but I cannot thank you enough for those that have participated. It does go a long way. Whether you want to buy me a coffee and get access to all the calculators, or $15 a month gets you a one-on-one coaching session with me every single month, please jump into the Patreon and sign up. I will leave a link in the description below to sign up. All right, so let's just jump right into it, guys. All right, so we are here at the Dividend Tracker app, and today we are talking about an 100K portfolio that can deliver over 20K in annual dividend income, guys. That is 1.7K in monthly income and $400 in weekly, and even $60, $58 in daily income, guys. The yield on this portfolio is 20%. 20%. All right, so it's quite a healthy yield, certainly a higher yield. And to make 20K on 100K cost basis is really, really strong. Of course, we want to focus on assets, on ETFs that have NAV appreciation. Part of my criteria, we have NAV appreciation and we have great yields and great underlying assets, guys, with a great brand. All right. So let's look at the portfolio. All right, so the assets I have chosen, the ETFs I've chosen are Baggy from Amplify. All right, Baggy is a Bitcoin focused max Bitcoin yielding product with the objective of yielding above 30% in total distributions annually. I believe their goal is 30 to 60%. I think they're going to come in closer to 30%. And you can see the current yield on this product is 33%. All right. And yes, we have, in about 30% of the portfolio allocated to a Bitcoin product. Some of those are the folks in the comments. Some of those folks in the comments don't like a huge allocation of Bitcoin, and I do understand that. You want to be conservative. You want to focus more on maybe the S&P, maybe QQQ, maybe total market, and I totally hear you guys. And that is to your discretion. If you want more allocation to the S&P and whether it's QQQ or S&P or international markets, by all means. Personally, and not financial advice, but I am a Bitcoin bull. So I am comfortable upping my percentage of Bitcoin exposure for the benefit of its volatility, because when it comes to covered call products, we benefit from volatility. That means we get better premiums with volatility, with stocks, with assets that are going up and down faster in a more larger basis. All right. So with that comes more premiums and the opportunity to farm bigger yields, guys. So in this case, Baggy does give us a 33% yield. That's something I'm comfortable with. You might be totally different, and I totally am cool with that. Of course, everything is up to you, but these are only educational sessions. All right. So next up, we have QQQI from Neos, and that's the QQQ covered call ETF, high yield. Of course, we focus on that, and that is one of our tried and true investments. Some of the ones you've seen a lot in my channel, and that's giving us a 14% yield, 13 to 14%. Okay. And then next and last, we have Tap Alpha's T-SPY, which offers us a 14% yield. And this is Tap Alpha's SPY growth and income high yielding ETF product. All right. So the trio of these will get us to 21K in annual income on a 100K cost basis. And I want to stress that for the inception of all of these, we have seen price appreciation. Let's look at that right now. All right, guys. So we are here in Google Finance. All right, and we're gonna look at all of these products. T-SPY, we have Baggy, and we have QQQI, and all of them since their inception have increased their NAVs. All right, increased their price. They've price appreciated. All right, you can see that T-SPY has grown 2% since inception. Amplify's Baggy has grown 2.3%. And QQQI has grown almost 8% or 7.5%. So not only are you getting those great yields, your assets, your NAV, your price, your your capital profits are in gaining, right? They are increasing, and they're stabilized. They're increasing. Now, it's not crazy increases. They're not up 10, 15, 20%. Now, mind you, a lot of these have only been out for a year, but we have grown the NAV. And that is what we want to see. We want to see a stable or growing NAV. We want these assets to follow their underlying and grow with it, and harvest a portion to give you back that income. And that's fine. These are income oriented products, of course, but we don't want to have NAV decay. And almost every one of the products I look at on this channel focuses on NAV appreciation. It's one of my principles. So yeah, all of these have really, really healthy NAV appreciation for the time they've been out, which is like pretty much about a year. So here are the three ETFs, as I mentioned. Baggy would get us an annual dividend of 11K, okay, or distribution. Neos's QQQI is going to give us 5K about, and T-Spy will give us 5K. So Baggy's, definitely carrying with 50% of the distributions, and then Neos and Tap Alpha are about 25% each. And that's okay. We're Bitcoin oriented. We're focused on Bitcoin. That is okay, and okay by me. Okay, so with this structure, you have the benefit of getting distributions all throughout the month, guys. So you have baggies at the end of the month, you have T-Spies near the beginning of the month, and then you have QQQIs also like kind of mid-month or near the end of the month as well. So you get a mixed bag of payouts all throughout the month, which I think is always cool. People want different differentiation between the dates of their payouts. All right, guys. So, should you guys want to drip this investment or reinvest the distributions in every single year? All right. And then you hold it for, let's just say, 20 years, right? And our cost basis initially is 105K. um, every single year you will compound that 21K, and price appreciate a bit, and of course you're reinvesting those dividends, so we have the snowball effect of more cost basis with the yield coming in. All right, so after 20 years, guys, after 20 years, remember we were starting at 100K. After 20 years, you will have a total balance of $4 million, guys. Look at the power of what compounding can do after 20 years with these high yield products, okay? After 20 years, you will have $4 million in total value, with a annual income coming in of 720K, right? And you just let a 100K portfolio ride for 20 years, all right? That's wild. Your total dividends received to be 3.5 million, right? Every year it'll snowball and get bigger. And again, at the end of it all, 720K in annual dividend. The end of it. Now, of course, like, is everything, this is a simulation? Is everything going to hold true? We don't know. And these are higher risk products. This is Bitcoin. This is Nasdaq 100. This is the S&P. So these are high risk, guys. Okay, I want to caveat that. I want to stress that for the commenters down below that don't like Bitcoin. I understand your opinion, but for me, I am a Bitcoin bull. But if you guys drip this portfolio, it has the power to do some major, great, great stuff here, guys. So, guys, are you invested in Baggy? Are you invested in QQQI? Are you invested in T-Spy? Leave a comment in the comment below, guys. Outside of that, guys, sub to the channel, and all the best. Cheers.